you attract a very different renters, right? Renters that would like to have everything is been taken care of and have good management.
We want to make sure that the resident that goes into the property is the best applicant that we can get. The management of the property is the number one deal. Finding a property is important, but regardless of what market you're in, finding the right management company is way more important than the property.
Hello everyone, and welcome back to Path of Progress. I'm your host Alex Kononov, and today's guest is a true legend in the world of turnkey real estate. Terry Kerr started with a borrowed toolbox and a Honda Civic and built it into one of the most respected vertically integrated operations in the country. As a founder of Mid-South Homebuyers and Mid-South Best Rentals, he's bought, renovated, and sold over 5,500 homes and manages nearly 6,000 units across Memphis and Little Rock and leads a team of 110 employees and 200 subs. Terry, it's an honor to have you here. Welcome to Path of Progress.
Oh, thanks so much, Alex. Glad to be here, man.
Thanks so much again. Terry, let's start from the very beginning. Take us back to the beginning of 2001, 2022. What was the spark and how did you discover real estate?
The spark was I had the best job of my life selling advertising at a respected business publication. And as awesome of a outfit as it just wasn't a good fit. It was an indoor kind of job. I'm an outdoorsy kind of guy, and I just was not fulfilled. And my wife and I had a newborn, and we were renting. And we wanted to live in a nice house, but we wanted to keep our personal overhead low. So I decided to find a fixer-upper. Had no real estate experience, no carpentry experience except for building big skateboard ramps, but found our first fixer-upper and just fell in love with the transformational process. Worked for 7 months, nights and weekends on our first house, and a couple months into it, decided, man, this is what I want to do. And my wife was supportive, so I quit the best job of my life, took a 50% pay cut to have a flexible outside day job to make a run at the real estate business. And fortunately, it worked out.
So your American dream pushed you to make this leap, to own the house, to own a property and some real estate in the United States.
That's it.
Love it. So, okay, after your first home, you bought yourself a house, you renovated, you live there. What was the next step? Did you decide to, hey, I'm kind of good at it now, let's try it again? Or what was the push?
So when I drove the last nail on this house that we moved into, I ended up with about $65,000 in sweat equity. And so again, no real estate experience, but I started educating myself on, frankly, audio cassettes for the last 5 months that I was working on this house. So I was learning creative real estate techniques, owner financing, seller financing, all that kind of stuff. And when I decided to make a run at the real estate business, the idea was that I would just flip 3 houses a year and selling retail, and I'd be able to replace my day job income while also acquiring rental property. So when I decided to jump, that was the idea. And then about a year into trying to make that happen, had a couple of rental properties that I ended up selling to a friend of mine who wanted to keep them for his rental portfolio. And so really where the business was born is that my buddy who bought them, who I had not seen in years, told me that the reason he was willing to buy them from me instead of fixing them up himself and keeping them in his rental portfolio like he had done for years was that he was out of time. He wanted more rental properties, but he was out of time and couldn't rehab them himself. And so a business of selling rental property to real estate investors was born in 2002.
Interesting. So first you got your American dream house. Second, you decided to replace your income because you need to live, you need to pay your bills, right? Support your family, have your newborn here. And now you got a need from your friend circle. Say, listen, you done a good job and I don't have time to do that. Let's partner up. They bought your property and now you understand, okay, this is the niche that they want to be here. Now, tell me this, why single family? There's other assets, right? There's small multifamily, large multifamily, and why Memphis Little Rock?
Well, I was born and raised in Memphis, and so that's where I started. And I have a family member in Little Rock, my cousin, who I kind of helped prod to get into the real estate business himself. Little Rock was the next obvious place for us to go. It's only a couple of hours from Memphis, and my cousin, who had a successful business there, still does, became our acquisitions guy over there. So it was just a logical place to go. And also, Little Rock has a lot of the same demographics as far as rentership goes as Memphis. So it just worked out. But why single family? I tell you, I like single family because I feel like it's less risky. I like the rental property business because I feel like it's also less risky than, say, selling retail. I know some very successful retail flippers. However, the great thing about rental property is as soon as you drive the last nail, you can put a renter in the property and you stop the bleeding and start making money. Versus if you're going to sell retail, you have got to, then list it with a real estate agent and pay a commission. You've got lots of holding costs while you're trying to sell the property. And I like the safety of the rental property business, and I like the safety of the turnkey business because even if I didn't have even if our company did not have a wait list of buyers standing in line to buy from us, which fortunately we have for years, even if we didn't have that, as soon as we put a renter in the property, the bleeding stops. And so I like the safety of the rental property business that way, the single family business. Also, financing is easier to obtain, whether it's private lenders, which is how I started and how most of my buddies started, or it's local banks. Once you've got a little bit of experience, it's easier for them to wrap their heads around it and to get better rates and to grow what we like to call our flip lines of credit with local banks. And so, and also it's just comfortable. It's what I know. I've done some apartment flipping back in the day when I was first getting started. It was very painful. I didn't know what I was doing. And I learned a lot and I could have kept going, but I like to say that our business is built off of just hitting singles. We're not even swinging for the stand up double. It just hit single after single after single, and it might sound boring, but it's fun.
And listen, it brought you where you are nowadays with your scale. So born is good as long as it yields to results, right? And in your case, it was tremendous result. And I feel like there was a light bulb moment when you had an actual professional investor as your friend who has other investment properties, and he was considering your property. And as long as it cash flow, it makes sense. And what I like about you is that you combine the two of the best from two worlds, right? One is a home ownership and flipping business. Another one is a rental. You still wanted to keep rentals because it's a safe zone. You don't have to sit on the property and sell it for years or months. It doesn't matter what market it is. You already have rented in place. So worst case scenario, you're going to keep this property. If it's renting, it's cash flowing, you're good with that. But if you find an investor who takes and gives you a good chunk of money and he still makes money and you make money, then it's win-win for everyone. And so at what step you decided, okay, I'm not only just selling those properties, but I want to manage them?
Well, quickly, so I was managing my own properties, right? And I was selling to some investors and they were complaining about having to manage the properties. They don't like having to, it's a lot of nights and weekends work, right? And it's a lot of using your lunch breaks to, review applications, return leasing calls, talk to the plumber who needs to go fix the toilet, all these things. And they didn't like it. And because they didn't like it, they didn't, they neglected the resident, right? And then they would have turnover in the property because the water heater wasn't getting fixed fast enough, or they weren't returning the applications or getting back with the residents on applications quick enough, so the good residents would find another place to live. And I quickly found out, I was like, look, if I'm going to scale this, and if the rental property is going to work for our buyers, we need to be the management company. And so we started our management company, and really that is when the business started to take off because the returns for our investors went way up.
So pretty much when those investors realized that it's not a passive investment anymore, that it has to do some work, you have to answer the calls and do a lot of, it's actually a second full-time job. And if they have a job, it's getting really tough to manage those properties while they do some other stuff. Pick up a call at night. Hey, my toilet got clogged. Figure it out. And what are you gonna do? You have to figure it out
Yep.
because it's one of the necessities, right? And now they understand they need you and they need help. I love it. And I love how you came up to this point. So how was your scale on this front? So you started with one of your properties on your own. You kept growing your own portfolio on slower pace, and you keep accumulating and selling to investors and accumulating that management. What was roughly your first year of business versus your fifth year in business? How big is your scale and how quickly you grew to your operations?
So the first year was the first house that we rehabbed. We got that line of credit of. The next year, I did a house and I put a resident in there on a lease option. So that was just one house the next year. The next year, I did a couple of houses, and those two houses were the ones that I ended up selling to my buddy. And the business of selling bargains to bargain hunters was born. And then the next year, I did 7. The next year I did 12. And then in 2000 and between 2004, 2005, I bought, rehabbed, and sold 34 houses with no employees. So I was acquisitions, I was sales, I was the bookkeeper, which I was a terrible bookkeeper. You know, I wore all the hats. I was the contractor, and then hired my first employee in 2004. And that's when I learned the importance of leverage. And I guess that's really kind of when we started taking off, is when I hired my first employee in 2004.
Leverage, and in the human space also delegation, right? It's hard to delegate some of the tasks that you've been mastering and you took you years to master, and now you have to train someone and you have to go through this process again, but you have to if you want to grow, right?
You do. And sometimes it feels like taking a step back, because you've got to keep the wheels on the bus while you're training somebody else to drive a portion of it, and it takes time. And so it's important to make sure that you're hiring the right person. That's for darn sure.
So tell me this, we kind of mentioned briefly Memphis and Little Rock, but what did make it the right foundation for your growth in terms of supply, price to rent, and general demographics? Was it the best spot at the time? What do you think looking back?
Man, what I think is I'm like the luckiest dude I know. I was born and raised in Memphis. I know this town. It's a price to rent ratio town. Just luck. There's no skill involved in picking the right city. Memphis, I think 53% of the Memphis population rents. We're a distribution hub. And so folks can graduate from high school, have no higher education, and get a killer job at FedEx, at UPS. We've got the third largest railway. We're right on the Mississippi River with all the barges. And so there are so many good, solid blue collar jobs in this town that provide good jobs for most of the Memphis market, which rents. And so it's just the stars are aligned to make Memphis a killer cash flowing rental market. And I just happen to be born here.
Is it still a good market to invest?
Oh, absolutely, man. FedEx isn't going anywhere. Ever since Amazon cranked up, it's only gotten better.
Yeah, okay. No, I hear you. This is important, right? We have jobs and we have growth projections, development going on in the city. We have our secret sauce, like gunpowder to explode in our rentals and units. There is always demand. It's all about demand, right? If there's demand for rental capacity, you just provide that supply for them.
Yeah.
But
now Elon's here with XAI, and he's actually working on his second huge new construction project. And so XAI is the second largest taxpayer in Memphis, Tennessee, next to FedEx. So that's just getting ramped up as well. So lots of good jobs.
It's gonna give it even more. I feel like. So I didn't know about XAI in Memphis. This is a very interesting point. How far is it from the main city?
It's in the main city. It's on the southern edge.
Wow. Wow. That's and is it supposed to bring a lot of jobs to the area?
Yep, absolutely.
Incredible. So listen, let's talk about back at the operations. You're scaling today, managing about 5,800 units, you said?
Yeah, about 5,800. And then we've got probably about 300 in process. So 5,800, but the pipeline, there's about 300 houses either being rehabbed or being built from the ground up for new construction direct to rental as well.
So on a year 5, you had 1 employee and you had 34 flips. What is your year looks like today?
Last year, we flipped 680 houses, and we're trending about the same this year. And so about 200 of those are new construction, direct to rental, and the rest are flips. So I mentioned earlier, that there's a little bit more demand than there is supply. And so one of the ways that we've been able to deliver more supply is actually creating our own supply with new construction, because the only downside of a rehab when you're doing it to scale is you can't, especially in our business model, is we're not looking for the light rehabs. I'm not looking for something that just needs a little paint and carpet. We really prefer the houses that need a full-blown gut job, because when you finish rehabbing a house that has had a full-blown gut job, the kitchens are gutted, the bathrooms are gutted, new HVAC, plumbing, electrical, water heater, roofs, all that, you're delivering a completely refinished product that is not going to have a lot of deferred maintenance over time. And so, it makes it easier for us to manage. And also, it's a much more pleasurable experience for our investor because they're not getting hit with repairs all the time. So, since that's our business model, there's not as much product for us to find, right? You can't make something fit that description. And so we've started doing new construction. So in both Memphis and Little Rock, we're trending to do about 200 total this year.
I love it. So you actually do turnkey real estate in a meaningful way, not just paint and put a lipstick on a pig. You actually go in deep and make sure everything has new mechanicals and less maintenance as possible. And it actually makes sense, right? You still manage those units and it has to go back to you. All those calls about the issues that are going to be on the property someday, it will come back to you. They'll bite you if you didn't do a good job. And it gives investors peace of mind. And on top of that, you attract a very different renters, right? Renters profile, the ones that would like to have everything new and open, and they will take care of the property as if they see everything has been taken care of and they have good management board that taking care of it, then everything will be on the same level.
Yeah, and that's a huge component, is we get to be a particular in regards to rentership, because since we have the most primo product in the neighborhoods, then we get to be more particular, about who moves into the property. So, we're only approving about 1 out of every 5 applicants, because we want to make sure that the resident that goes into the property is the best applicant that we can get. And I know there's plenty of time for us to discuss it, but I will say that the management of the property is the number one deal. Finding a property it's important to find the right property, but for folks out there, regardless of what market you're in, finding the right management company, and that right there is way more important than the property.
Yeah, absolutely, because it can make or break a deal. I personally had to fire a property management company, and I kind of built in-house with my GC. So I did similar, but I outsourced it to my GC, but I supervised and trained my GC how I like it. So it's actually his company grew out of my portfolio to him, and I'm happy about it. And now it wasn't parallel, because the property manager before that, it completely neglected properties and renters. They called me, owner, saying that the property manager didn't pick up his phone. It's not a good thing, right?
No.
So walk us through your operations. I mean, scaling to 5,800 units managing, and you have so many employees. What does your operation looks like today? Renovations, management, flips, your hardware store you kind of mentioned to me earlier. Can you tell us about your full circle here?
Sure. Well, so, obviously started flipping, and then started the management company. And then right after starting the management company, like a week later, I found myself having to start a third company, the maintenance company, Mid-South Renovations. So fast forward to now, Mid-South Renovations, we hold all of our own mechanical, electrical, general contractor, and plumbing licenses, right? So the reason we had to start a third company is because the renovations outfit, and back then the renovations outfit was probably, 15 subcontractors and 5 W-2 employees. But we have to do the work on the rehabs. And when we're doing the work on the rehabs, the renovations company is working for Mid-South Homebuyers. But when they're doing the repairs to the rental properties, they're working for Mid-South Best Rentals. Well, I couldn't commingle those funds. So I had to start a new company that would have two clients, right? And so we started the renovations company. And then in 2012, my then property manager and head of maintenance, who were a husband and wife team, they went on a 2-week vacation. And I had to manage all of the technicians that were not doing the rehabs. I had somebody to help do that, but I was managing all the technicians that were doing the repairs on the rental. And it quickly became clear that they were spending way too much time driving around looking for specialty parts. Right? They're looking for this kind of siding. They're looking for this kind of valve for a water heater. They're looking for this kind of thermocouple for an HVAC system. And they were just driving all over the place. Well, 2 weeks later, when my managers came back in town, I had a lease signed for the building that I'm sitting in right now, which is a 30,000 square foot warehouse that I've since purchased the building next to it. So we got 45,000 square feet of warehouse space, specifically so we can buy all of our materials in bulk. And so 100% of the materials that our technicians are going to need to fix the rental properties for the investors and to fix the rental properties for the residents is right here. So when we get a repair call in and they said, oh, well, the water heater is not working. Well, we know it's going to either be a breaker or a thermocouple or a heating element or whatever. And so our plumbers and or electricians have these materials on their truck, right? And so they don't even come in to shop here. We have curbside service. So depending upon what is needed, we pull those parts, the technicians grab all of their stuff for the day, and there's no drive time. And so the important thing for an investor to understand that's purchasing a rental property is that drive time is being paid for by the investor because it's a technician who's on the clock, right? And so for my personal properties, I didn't want the drive time. For the investors whose properties we were managing, we didn't want the drive time. We also knew that if we could buy materials in bulk, we could spend more money on the rehab and deliver a better product, or maybe purchase a property that we normally wouldn't be able to purchase because our overhead on that specific property would be low. So fast forward to now, we've got the flip company, the management company, the renovations company, and the hardware store that kind of provide all of that vertical integration and efficiency. And we've got the same setup in Little Rock. So it definitely didn't happen overnight. And as we were talking about before we hit record, nothing's perfect, and we're constantly working on sharpening the axe. But it's a lot of fun.
But I like it. I think it's an important point for the listeners. If you want your business to grow and make it better, go work there for a day, for a week. Actually go behind the wheel and understand what's the operational process and where's the bottlenecks. In your case, you had to go through the necessity. You had to be there and operational because your main guys were on vacation, and you understand the need there and you streamline the process, and now it affected all of your businesses. Not only your maintenance guys, but also your renovations, because you already have it all in-house and you have everything is there. There's no more thinking, there's no more processing. You created a system, and everyone adhering to the system make it less points of failure, right? There's no less friction in the operation and the less thinking involved. People can't mess it up. It's something that is written. You do this and this and this, and now okay. So I don't have to think about it. I don't have to look for it. Home Depot lines. Home Depot sometimes short of supply. They don't have this in. You have to shop another Home Depot 10 miles away. Now you don't have this. Love it.
Yep, it's nice. And when materials get down to a certain level, whether it's 2x4s, plywood, or PVC elbows, the system knows that, and then it automatically reorders. So it makes it nice and simple. You don't have to think about it, and you can concentrate on growing the business.
Yep. No, I understand. So you have this many businesses, or the 5-6 businesses you mentioned that you run at the same time. How do you manage all of this by yourself? Do you have special teammates in every single role for the business, or you still overseeing every single operation?
Oh my goodness. No, I don't oversee many of the operations, most of the operations. We have 12 different departments, whether that's hardware, accounting, billing, rehabs, get-readies, electrical, customer service, acquisitions, sales, IT. So we've got managers for every division. And yeah, and I've got a COO, Patrick Nix, who's also a co-owner of the company. Patrick and I were high school buds, and he grew up doing real estate as well. And so he and I merged about 10 years ago. And Patrick brought a manufacturing process to our business. And that's another one of the reasons that we really have taken off in the last 10 years. But no, so it was interesting. About 12 years ago, one of my managers was a little frustrated with me because I was a bit of a micromanager. Yeah, he was frustrated. He's like, dude, trust me or train me. And I was like, okay, man, well, I trust you. And he's like, okay, well, we'll train me then. I was like, well, no, you actually, you know what you're doing. He's like, okay, well, let me do it. I'm like, all right, cool, do it. And so then we just kind of got more into KPIs, right? And it's like, okay, I can just manage through numbers now, and I just don't have to be all down in the weeds. And so now, we have Zoom meeting after Zoom meeting, and basically I just kind of run the circle every week and just sit in on the different department head meetings. I don't run any of those meetings. I just poke holes in the deal. And we have a lot of cross-departmental meetings. So it's rare that we have a meeting with one department without other people from different departments in those meetings, because everybody from different departments needs to poke holes in the other department's meetings. And so we work hard on culture around here. And it's a huge piece of the puzzle.
I think one of the most important things here that you mentioned about your story with manager, that he communicated with you that he's ready to take on ownership of this project. Listen, stop micromanagement. I'm ready to take ownership. I'm gonna do it right. You have to believe and trust me. And then you got this feedback from your employee, from your manager, and say, listen, I trust you, and you breathe out. You took back seat and you observed how it processed. And actually looks like it went very well, because now you can relax and observe even more from different directions. But let me ask you this. You have so many departments, so many managers. Do you have a situation where you have to put your foot down and say, no, listen, we're not doing this way. We're going to do it another way. This is what I'm telling we're going to do right now. Do you have this? You have this power. It's not a question, but do you have this need to do sometimes?
Not anymore. Because now it's just a matter of asking the right questions, because we've got all the right people on the bus and they're in the right seats. And so, we've all got blind spots. I've got them, and my employees, managers, they know they have to call me out when I'm off base and I have my blind spots. And so, we've got a culture here that everybody, politely pokes the holes, and we all have to set our egos aside. Right. And since everybody wants what's best for the business, and part of running their department is being a good partner to the other department, there's no putting a foot down. Those days are long gone.
Yeah, love it. Now, let me ask you about the operational side. You have over 150 rehabs and over 100 new builds active today. How do you forecast labor, materials, capital? I understand materials you already have in stock, but if you have such a substantial rehab, do you have to expand your warehouse? Do you do your annual forecasts in advance? You have some goals for this year, or you just roll with the punches?
Well, so in the warehouse, we have a certain number of materials that we keep on hand. And so we don't have to forecast too much, because we only order new materials of a specific type once we get down to a certain level. And because we've been working with our vendors for so long, we know how long it takes to get those materials in-house. So we really don't have to forecast with materials. We just order as needed. And, occasionally you'll get a good deal on some plywood. And so we'll just stock up on plywood way above and beyond what we typically would. But we don't have to do forecasting in that manner. And as far as forecasting labor, we're really fortunate that we don't have turnover in our labor department. As a matter of fact, I've got an employee that has worked with us for 22 years, another that's worked for us for 21 years. These are both managers in the hammer swinging field. And the reason that we are able to not have to forecast labor and don't have a labor shortage is that we don't ask any of the folks that swing hammers for us, whether it's contractors or W-2, to give us a bid, because folks out there right now that are listening to this, and when you're needing to get an estimate for your project, right, what I suggest is don't ask for a labor and material estimate. Ask for just a labor only estimate, because the materials are what they are, right? There's a way to keep a handle on not making sure that you're buying too many materials for the project, but try to just bid the labor only, because it's a lot easier on the contractor to just bid the labor than it is labor material. But back to our deal, our contractors don't have to do that. So they're able to, we don't have to pay them as much because they're not spending their time giving us bids. They don't have to front the materials because we have the materials, right? So since they're not having to float materials, that helps us get a better price. They hit us up for a repair draw every Thursday. And then they pay their guys on Friday. So they're not floating labor, they're not floating material. So we're able to get the best deal that anybody can get on the materials. And then you throw into the deal that we give them work over and over and over, so they're not having to go to look for other work. They might not make as much on us as they do on other projects, but we keep the lights on for them. And then they can go do other projects where they hit a real good lick and make more money, but it's not steady money. And we're the steady client. And so I know that was a long kind of maybe non-answered question, but I just kind of wanted to let you know how we do what we do, and how that benefits the contractors, and it also benefits us, and of course on the labor side for maintenance of our 5,800 houses, it seriously benefits our investors.
No, it makes sense. You don't have to forecast labor because you have it consistently flow. You a stable provider for your labor, for your subs, and that's why they're always available for you. And also you saving them time on transportation, on thinking, on processes, because you already have everything lined up. Material-wise, processes, it's saving them so much money that they can just come and work. That's all they need to do. Just come and work and do the work that you know how to do, and you do it good, and everyone gets paid and everyone happy.
Yeah, it's when COVID happened, we were really fortunate because we had just shifted a gear in our rehabs and maintenance to where our contractors were not coming in to shop for the materials. We have developed 9 different stages for a rehab, and when we're doing a contractor walk and doing a material takeoff, we enter those materials into the system, and the system knows which of those materials go into stage 1 through stage 9. So when the contractor is going to be ready, let's say tomorrow for stage 6 on 123 Main Street, they just make that note in their portal, and that sends a message to our warehouse team to pull all the materials for that stage for that property and put them on the pallet. So then when the contractor shows up the next morning, all the materials are ready for that contractor. And so that contractor is saving a whole lot of time, but we as the company get to save that money, because beforehand we had to pay the contractor more because they had to spend a lot more of their time, rustling up materials.
I understand. And we have different ordering departments. So instead of you don't have to order material over and over for every single project. You have a lot of in bulk and wholesale price. And let me ask you this: during COVID, did you had a supply shortage issue, or since you guys had warehouse, you pre-ordered everything, you were fine?
We knee-jerked, took a lot of our capital, and we didn't know what was going to happen. We heard the supply chain was going to be awful. Man, we stocked up like crazy. Like in hindsight, we probably could have chilled a little bit, but you don't know what you don't know. And what we did know is that if we don't have a 36-inch sink base for a rehab, we're dead in the water. And so as an example, so we still have arc fault breakers that we stocked up on from COVID. So yeah, man, we did not have a supply chain issue, but we probably could have dialed it back a little bit.
No, love it. And I know we discussed labor, material forecast. What about capital? I know, like, to have 100 builds and you at the same time, you have to have substantial capital and do 150 rehabs. Do you outsource money? Do you raise capital or pre-sales those in advance? What is your process?
Our process is, well, if you don't mind, I'll kind of start from the beginning. So in the beginning, I borrowed money from this guy, Keith Pickett. He was a private lender. He charged 4 points up front and 13.25% interest. Don't ask me where he got that quarter from. He would only loan me money for the purchase, and then I would have to use my money from that a line of credit to fix the houses up. And I had about 65,000 bucks in capital there to do the fix up. So I did about 30 flips with Keith. And then I met a banker at a Memphis investor group meeting, and I got my first flip line of credit. And so they were loaning me money to buy these houses, fix them up. I'd hit them up for repair draws. They'd send an inspector out to the house, make sure everything was cool, and they'd hook me back up with my repair draw money. And so that was our first flip line of credit. It was for $500,000, and fast forward now, I think we've got $87 million in flip lines of credit, and we probably have an outstanding balance of 60 million right now. It's just
and does it include new builds?
Yes, it does.
Construction?
Yeah. And so we just so our debt consists of, like a few vehicles and a couple of properties that we, run and gun out of, and then of course, all the flips and new construction we do.
That makes sense. You started from somewhere. That's why they call shark loans, right? Lenders.
Yeah.
From the first one that they charge an arm and a leg, but it gets you into the business. It serves a purpose. It gave you credibility, gave you proof of concept, and it gave you some experience that you needed to go to the big bank and say, listen, I've done this and this and this. I want to scale it now. I need your help. And they're like, okay, he actually done some work. He paid his dues. And now let's try this again. And let's try this small budget, $500,000, and let's see where it goes. And hey, looks like it was profitable for them too, since they expanded your line of credit in such a big capacity, right?
Yeah, it's cool. We're still working with that bank today.
Love it. So talking about, I mentioned, kind of ask you a question about annual planning. Do you have some annual planning meetings? Do you have some KPIs that you have to have for every single department to hit this year, and maybe structure some bonuses, motivational for them, perks?
So as far as historically, we've always just done as much as we can do. So we really try to balance quality of life here for our employees with our goals, right? And so there's some folks are, going to want to set a goal of, way up here. And, if you can't hit it, at least you get close, kind of thing. We want to buy every single piece of dirt that we can find that makes sense for us to build on. We want to buy we want to buy every single rehab that makes sense for our business model. We don't want to have to pass on that dirt or rehab because we have a lack of capital, or because we have a lack of buyers, or because we have a lack of labor. And we've never had to pass on a deal because we were bottlenecking anywhere. So there's so much opportunity. And so the thing that we have tried to be really careful of is the thing that we strive for is being appropriately aggressive, right? And so we want to do as much as we can do with the resources that we have and continue to grow without killing our team and keeping quality of life, right? And so, we'll take the temperature of our team and go, hey, you guys, we're thinking about doing this right here. We want to crank up new construction and we want to start buying dirt. What do we need to do to hit this goal? And what do we need to put in place to do that? And so we look a year out, and then we back it out, 6 months, and then, 90 days. And we just kind of eat the elephant like that. I know it's not like super, super formal, and it's kind of traction-ish, the traction-ish model, but that's kind of how we've looked at growth, is just doing as much as we can do with also keeping quality of life for everyone. And as far as like KPIs are concerned, yeah, man, everyone's got a KPI. KPIs are, how long does it take from the day that we buy this house till we start the rehab? And when we start the rehab, how long until it takes till we get our first code enforcement inspection? And how long does it take to get the CO, once we've driven the last nail, that kind of thing. So we measure what we call the grass growing between each stage of a rehab and between each stage of new construction, man. And we measure how long it takes for us to get out to, replace a water heater, or, get out to inspect a leaky roof, or a resident's request because maybe there's a fence where there's a dog on the other side. So we measure all of these things, but there aren't monetary incentives in place necessarily, because we feel like if there's going to be a monetary incentive in place for a team member or a department, we would need to do that across the entire company. And so that's not something that we've done.
No, that makes sense. Now, you mentioned timelines. I think it's very important to talk about. What is your average timeline for a flip for a house built, and let's talk bigger for a plot. You buy a plot, subdivide, and going through the process to before building a house.
Sure.
So those three elements.
Yeah. So for rehabs, it's around the 4-month mark, and for new construction, it's about 6 months, and that includes like surveys and architect work and getting the lot scraped and prepped. So yeah, about 4 months for rehabs and about 6 months for new construction. And then we're also doing some full-on developments in Little Rock where we're on our third neighborhood, starting from scratch, building roads, putting in all the infrastructure, sewer, all that kind of thing. But I don't count the development in those numbers because development, it just takes a lot longer.
And those new developments, new houses that you built, is also built to rent, right? And you rent them and then you sell it to investors?
Correct.
And what is your offer proposition here? Do you calculate returns for your investors when they buy? Do you offer some cash on cash? Hey, listen, this property can perform this and this much, or you do their work, leave it for the investor when they buy it? How do you calculate how much price should be of the property?
It's funny you asked that because we've kind of gone back and forth. Because before we didn't really we just let investors, calculate their own returns the way they wanted to calculate them. And then there's, some generic ways folks calculate their returns. So we had that on our website. We're like, hey, here's 123 Main Street. This is what it's going to rent for. Here are the taxes. This is the insurance. This is what, appreciation looks like, what we think it's going to look like. We put that out there and we'd have investors say, man, I'm going to get a way better return than that because of, tax benefits and this and that. And then you got to calculate people's tax brackets and how much money are they putting down? And are they, using a self-directed IRA, or are they doing a 1031? And so, man, there's just so many different ways different investors are going to calculate their return. So on our website, we've got a generic pro forma, and then we've got what we call the cash flow calculator, which is dynamic, where folks can go in and say, hey, I'm going to buy the interest rate down this much. I'm going to put this much money down, that kind of thing. So we put it in there so they can kind of play with it themselves. But there are just so many variables. Yeah,
five investors can underwrite one property in 5 different ways and have a different kind of approach of how much they can get from the property. Some more aggressive, some less aggressive. And let me ask you this: if investors comes and you're saying, okay, rent for this unit should be $1,500, but he's saying, listen, I really think it's worth $1,700. Would you price it as investor wants it, or in the future? I know you already rented in the beginning, but if you have pre-sold property, you have an investor for it, do you say, no, this is our guidance, if you want it rented, it's going to be this much, or do you still follow along with the investor desire?
Well, I mean, then we'll just, engage in a conversation with the investor and say, hey, Mrs. Investor, I know that, we've got it priced at $1,500 and you say that you want to shoot for $1,700. We can certainly list it at $1,700. However, if this were a company rental, one of our properties, we would list it at $1,500. If we thought we could make more money at $1,700, we certainly want to make more money, and we would list it at $1,700. But the reason that we don't is because of XYZ. And if you price your property higher than the market average, then it's going to sit there longer. And that extra $200 that you're trying to get, if it sits on the market for an extra couple of months, you're paying the cost of vacancy, right? And then, maybe you get that $1,700, but chances so first you have the extra vacancy cost, then the chances of the property not renewing, the lease not renewing, is much greater. And so then you got turnover. So yes, we will try it at $1,700 if that's what you want, but we highly suggest that you don't do that. And they're going to follow our lead because, in the end,
you're an expert.
We're in the market, and, they're going to take our word for it. But, if it was $50, we're like, yeah, well, sure, let's try it. But we still think we should be here. And the reality is you don't ever really know, how quickly something's going to get snapped up, but by and large, we are all in these markets and we know where we should price them.
100%. No, I agree. You should always listen to expert, right? If you come in when you're an investor, always hire a team or surround yourself with a team of experts who knows what to do in this particular market. And if they partner with you on this house, it just makes sense to listen to you and your expert opinion on the data that you receive from other rentals in your market, substantial market. Now, Tell me this, we just talked a little bit about investor relationship here, right? And what is your usual investor satisfaction and how many investors return to you come back to buy another property?
Sure. So like right now we have got, I guess, about 65 houses under contract to sell, and about 75% of them are repeat investors. About 25% of them are new investors. We've done a couple of podcasts recently. I think I mentioned to you that really have not done any marketing. It's mostly just been like word of mouth, but we've done a podcast or two lately, and some folks have hit us up. So we've got a nice little pop of some new folks. And one thing that I will say also in regards to investors is we hardly ever get to meet the folks that we work with, the investors. Though they live elsewhere, they're buying sight unseen, and we really love to get to meet our investors. And so we started doing a little investor homes tours once a month just to invite our existing investors or anybody who might be interested in kind of seeing what we do. And we do a little field trip, show the before, during, after on the rehabs, and walk through the warehouse and meet the management team and all that kind of stuff. So yeah, we're encouraging folks to come visit with us because we love to get to know our investors more, but unfortunately we don't get to do that as much.
I love it. Now let's talk a little bit about risks of investment. How long do usually your tenants renew with you? How quickly, how often do they renew? How long does it stay in the apartment and building that you rent?
Sure. So
on average
in Memphis, the average resident stay is 2 years, and we're fortunate to have double that. Our average resident stay is about 4 years. And that kind of goes back to what you said about how, what if an investor wants to ask for more in rent, right? And so we've got the nicest houses on the street, and we stay about $25 below market because we know that encourages folks to renew their lease, and an extra $25 in value to the resident combined with quick repair service gets them to renew their leases. So we're real fortunate there.
And do you have annual increases baked in your leasing agreements?
Yeah, we do not have them baked into our leasing agreements, but every year, 90 days out before the lease renews, we take a look and see how much the rent needs to go up. And so during COVID, rents got bumped up like crazy, right? And then they kind of plateaued for a minute. And then now they're going back up, kind of steadily.
And how do you communicate with your investors? Do you send them monthly payout, quarterly? Do you send them reports for the property? What is the communication channel here?
Yeah, it's a monthly report. So we do direct deposit and send a monthly report.
Monthly report, direct deposit, really direct. And with you and them, it's like a property management agreement. So they buy property from you and you sign a property management agreement like any other property management agreements, right? And you just continue this communication channel with them on a monthly basis.
Yes, we sure do. And, we like to be really easy to work with. When we sell a house, we don't require any earnest money from a buyer. We never have. If something pops up during the purchase process and they need to do something different, we're not worried about earnest money. We don't have a clause like most property management companies do, where they're signing up for a year and there's a lease breakage or management agreement breakage fee. Folks can, if they need to sell, life happens, and if somebody needs to sell due to an emergency or whatever, no one's feet's held to the fire. So
that makes sense. You mentioned, I like what you said, that 4 years people stay in your buildings. Actually, it's attributes probably for your quality of workmanship, that you redo everything and they stay in new apartments. I understand they won't be able to find something similar on the market with brand new building that they moving in. Now the question is, how often do you have evictions in Memphis? And is this a problem there, or it's more like a rare occasion because you have new construction, new rehabs in your apartments, buildings?
Sure. Well, fortunately, Tennessee is a very landlord-friendly state. That's why that's another piece of luck that we have, being here in Memphis. Also, Little Rock is just as friendly as Memphis. And so even though we could evict if we wanted to, rent's due on the 1st. If we wanted to, we could pull the eviction trigger on the 2nd of the month, 1 day later. So obviously you don't do that, right? A lot of management companies that I know of, they'll file eviction on the 15th of the month. So rent's due on the 1st, they'll file eviction on the 15th. We don't do that. We're going to work with our residents. We spend a lot of money on customer service with our residents. We spend money to have, face-to-face conversation. We have rovers that have a lot of duties. A rover will go take before photos and after photos of a rehab. They'll put a for rent sign in a yard. They'll pull a for rent sign from a yard. They'll do a video of a property for the investor when it turns over. If we can't get a hold of an investor if we can't get hold of a resident who hasn't paid the rent, we'll go do a wellness check, and they'll knock on the door. They'll post a late notice on the door. They'll talk to the resident and ask them about being behind on the rent, and then get our resident retention outfit on the phone and hand them their phone and encourage dialogue, right? And so it costs a lot of money to do that, but when residents know that you really, truly care about them, they're more apt to tell you what's really going on in their lives, right? Because things happen. People lose their jobs, kids get sick, divorce happens, death, divorce, disability, all the things. And so, yes, we have evictions in Memphis like in any city, but fortunately, Memphis or Tennessee is a very eviction friendly or landlord friendly state. So we're not, it's not like California where it takes forever to get somebody out. So it happens, but we are very careful about pulling that eviction trigger. Because we know that turnover is the most costly thing for an investor. And so we're willing to spend our money as a management company to make sure that we keep every resident we can. And then one thing I'll also say for your listeners is that it's more common for a property management company to pull the eviction trigger quickly because property management companies make money on turnover. You'd think, you might think, they're not getting that percentage of the rent, so it makes more sense for them not to. But when a property management company puts a new renter in, they get paid to put that new renter in. They typically make a good chunk of money on all the repairs that go into it. They typically make money on collecting a bunch of application fees on residents that don't even get approved, right? There's a big income center for a property management company on turnover. And I managed my own properties myself for a long time before managing for others. And so when we cranked up our property management company, we kept all of our processes in place for our investors exactly the same way we had them for my personal property, which doesn't necessarily lend itself to profit centers for a management company. And so we make less money than any property management company I know, but we have multiple income streams. If we do a good job for our investors, they come back and buy more houses. And then, of course, we've got the hardware store, And so the vertical integration allows us to not have to make as much money on a flip and on the management and on any aspect of the business. And so, yeah, I know that was a bit of a rant, but
no, makes sense. And not only property managers take money on turnover, is charging fees for every unit they place. Usually the fee is 1 month's fees they charge. It's like agency fee. I know you charge half a month from what you told me before, but also they charge upcharge on the turnover on the renovation. Usually property managers and how they hire this maintenance guys, they hire this contractors that they come and renovate your unit. It could be a couple $1,000 to turn the unit. Additional charge for you as a landlord, and you need to think about it. They're also going to make money on this because they need to oversee this construction, they need to oversee this operation, report back to you. So there's upcharge over upcharge over upcharge, and sometimes it makes more sense to add more amenities to the building, to be nice to the tenant and have proper communication channel to retain. That's why the retaining of the customer, of a tenant, is one of the crucial piece of a good operation in a property management and just being a landlord, right?
Absolutely.
Because it's such a big expense.
Yep. And it's a fine line. I mean, the reality is if you don't pay, you can't stay, right? But also we're going to do our darndest to make sure that we're going to work with someone and try to avoid that turnover if we can. Our resident retention team, they know that if it comes down to it and we have to file eviction, right? Someone sticks their head in the sand and they won't get out of the house and they won't communicate with us. They know that when we go to court to do an eviction, if the resident doesn't give a hug to the representative from Mid-South Best Rentals after we have gotten a possession of judgment, then we haven't done our job, because we're an advocate for the resident. yes, we're going to evict them, but we're also advocating for them to do everything we can for them. And so we have many residents that will end up paying off a balance after they've been evicted. And if they pay their balance off, man, what a statement, that is. And if they want to pay off a balance after they've been evicted and come back, man, come on. And so, being the biggest single family property manager in Memphis, Tennessee, we've gotten a reputation as really caring for our residents, but also folks know they can't mistake our kindness for weakness. And so it's just that balance.
And it's fine line, right? It's not only profit center for landlord or property manager, but it's also stay human in all situations. Everyone has bad rough patch on the road, and everyone needs a second chance. And you have communication properly. If you know that you're not here to kick them even further and just to give them a hand if they need it at the moment, it will go a long way, right? They can recommend you or your properties to their friend, to family, and say, listen, it was so nice to me, and now, hey, listen, you have to try their apartments. It's the nicest buildings and nicest property managers, and now you have even wait list for your buildings because the people know that you are such a good property manager and they want to be in your properties.
Yeah, we're lucky that way.
Love it. So, Terry, you're doing a lot, right? Obviously, you've done through a lot of things and you have big experience. What keeps you motivated today after more than 2 decades in real estate in this game?
Man, because I feel like we just scratched the surface, right? Like, I really feel like we have really kind of hit a new place as a company and that we're really poised to just take off. And, we went to Little Rock about 7 years ago. And so now we're looking at a couple of other markets. And we've also just really started new construction. We just started it a couple of 3 years ago, but we're just now kind of getting ramped up. And so I feel like what keeps me motivated is I know that as cool as it is of how we've grown, that the sky really is the limit. And what also keeps me motivated is knowing the awesome managers and all of the team members that we've got on the bus. Dude, they're ready to go. Like, they're ready to grow. They're like, let's do this. And so they're motivated to grow the company with us. And I am 55 and I want this company to keep on going, without me. And I know that it will, because we've got strong folks on the bus in leadership positions, and we're looking at the next tier of leaders underneath our current leadership team. And so I love the people that we work with every day, and I'm stoked about their personal growth and their growth within the company. And so it's just awesome to see what happens when you put a crown over someone's head and trust them and train them and get out of the way and let them take ownership and run with it. It's really a thing of beauty, and I think we're about to kill it.
It sounds more like you're building a family there. Everyone is a family member, and you growing everyone within, and you want everyone to succeed and grow to another level and become even better. And coming back to your original point, creating a culture within a company, the right culture is actually goes a long way, and you just proven that, and just keep growing, because in the end of the day, you don't want this run company for forever. You would love to grow and do everything, but you want people within your company to grow and succeed as well.
Absolutely. It's a necessity. It's the only way it can work.
Love it. So for new, I want to ask you, like, you've done a lot, honestly, Terry, throughout your life, build vertically integrate many companies and grow, naturally progress to where you are today. For people, investors who just starting or somewhere in the middle, what are your biggest piece of advice to grow vertically like yourself? Where do they need to start, and how do they need to proceed to have a natural progression like yourself?
Sure. So one thing that I'll say is, like, every piece of the business, and, just using our company as an example, every piece of the business, whether it's the investor, the resident, our employees, closing attorneys, mortgage brokers, insurance agents, title companies, everyone, when the deal is done, when a house closes, when a house sells, after the rehab is done, everyone needs to say, you know what, I would do that deal again. I want to do that deal again. And if anybody in the outfit says, I don't want to do that deal again. Well, I want to know why they don't want to do it again, because either they're not a good fit or we're missing something, right? And so looking at your business from that standpoint, and then also, as an example, the insurance companies that we work with, we look at them like team members. The mortgage companies that we work with, man, they are full-blown team members because they're giving customer service to our investors, right? The title companies that we're working with, they are full-on team members. They're going to be at the holiday party. We're going to be hanging out, right? Because they give customer service to our different teams here at Mid-South and to our investors. And so as far as like the vertical integration goes, and even like the folks that we buy materials from, right? We're tight with these folks because we depend upon them to get us this stuff. So it's developing relationships and looking out for the folks that you're working with. Look out for their best interest. Look for opportunities for them. Introduce them to other folks that can help their business or their departments grow, and create that goodwill and create the relationships with folks to where they know that you have their best interest at heart. And then from the vertical integration standpoint, it's like, okay, do we need to start our own electrical company? Well, I was friends with some electricians, and so that's a hard conversation. Do we need to start our own HVAC company? You're friends with these HVAC guys, so that's a tough conversation. And you can multiply that out. When we started the hardware store, I was tight with our carpet dude. And so they're tough things, right? But I think it all boils down to having goodwill and really truly wanting the best for everybody that you work with, but also simultaneously looking for opportunities of efficiency, and then knowing that sometimes it's going to cut out doing business with somebody that you care about, and being able to walk that fine line. Like, we have not started an insurance company. We could. We have not started a title insurance company. We absolutely could, right? I've had these conversations with our insurance companies, with our title companies, and other outfits, right? But yeah, man, I know that was a bit of a rant, but
Makes sense. I think the biggest takeaway is don't be transactional in operations, right? You can't think one transaction at a time. You have to think long-term and repeatable business and build this relationship. It's all about relationships at the end of the day. And if someone's unsatisfied with your operations and how you behave in this transaction, then there's some problems that you need to fix and you need to evolve to a better form to be better with other people, and then the magic happens. And now look at your growth. You vertically gain, you meet with people and have repeatable customers coming back to you and wanting to do business again and again.
Well, you said it better than I could.
Processing your words in my own vision, and I love it. But Terry, I have last few questions for you. I know it's been a long time, but let's go with quick hits lightning round. So first thing that comes to your mind, let us know. One book or resource that shaped your real estate mindset.
I hate the title of this book, but it's an awesome book. It was written in 1910 by Wallace Wattles. It's called The Science of Getting Rich. And it's really just about mindset. It was like the first book of its kind. It quotes the Bible. It quotes the Quran. It's a lot of old school wisdom. It reads much like a textbook. It's not all rah-rah, but it's scientific. And I listen to it at least once a year.
Wow, this is new. I'm going to read it. Okay, second one. Most important trait a business or real estate leader should develop.
Most important trait. Man, be tenacious. You can be kind, but you can still be tenacious, man. Do everything you can do every single day to move the ball forward. Don't procrastinate. Do it. There's sacrifices to be made there. Especially folks that are younger, have more energy. Man, get after it. Time passes by quick. Don't be afraid of making mistakes. You're going to learn from those mistakes, and you're going to be better for it the next day and the next deal. Don't wait. Freaking go for it, and go for it now.
They're saying, if you have a direction, go every day to that direction. If you can't walk, crawl to that direction. If you can crawl, lay down in that direction, but always think forward to that direction, and you're gonna make it happen. I love it. Okay, one thing you wish you knew earlier in your real estate journey.
Man, I wish I knew how much things change right? Nothing stays the same. You know, when I was first getting started, I was like, oh man, if I can nail this down, then I'll just be able to do that forever. That is not the case. A business is changing every day. Technology changes every day. What your customers want changes every day. The law changes every day. And so be adaptable.
Love it. Love it. I think it's important to stay nimble, adaptable, and to be open-minded, right? In the end of the day, everything moving in a light speed, especially nowadays with AI, with real estate, even real estate sector gets moving. Myself building this proprietary software to underwrite real estate with AI, giving edge to people. And you have to stay open to that new ideas, because otherwise you're going to left behind. And this is the only way.
Yep.
Okay, Terry, I have one last question for you. If someone want to reach out to you, your company, and get to know what you guys building, what projects do you have, and get on board on your wait list for your properties, how people can reach out to you?
Sure. They can go to midsouthhomebuyers.com and just check out the website, click on the available properties. Right now, they'll see all the properties are under contract to sell. It'll give them an idea on what we do, and then feel free to sign up for the wait list or reach out for a phone call. And yeah, that's the way to do it. And then one other thing I'll say is that our website is designed to teach people how to shop for turnkey sellers. We want to work with everybody, but we know some folks are going to want to work in other markets, and the website is chock full of due diligence techniques on how to make sure that you're finding the right property manager, the right turnkey seller in any market. So please use the website for that.
I love it. I love that you give back to people. And I think education is one of the cornerstones of any real estate journey or any other journey, right? You need to educate yourself, and you give them tools from your experience, how to do this right, and the property management experience, so they can see what's needed to be done in terms of be a successful operation.
Yes.
Awesome. Terry, this was incredible. Thank you so much. Absolute masterclass on scaling system and mindset. Thank you for sharing your journey and insights with us.
Thank you, Alex. I enjoyed it.
Thank you so much. And to everyone listening, if you enjoyed this episode, don't forget to like and subscribe and leave a review. All of Terry's links and resources will be in the show notes. And as always, keep moving forward.